Good morning, everyone, and thank you very much for joining. This is the DAX Open with myself, Russell Shaw, Senior Market Specialist at FXCM. And my email address r@fxcm.com. I just want to encourage anyone that wants to contact me to send an email to this address, and I'll respond as soon as I'm able. Today is Wednesday, it's the 1st of December 2021, and I'm going to just bring up our high risk investment warning. There is going to be a US Open today. I know these the US Opens are really sort of higgledy at the moment, but we will have one today. So anybody that wants to join this afternoon, certainly welcome. We're going to try and do a scalp on the US Open, so please join if you're able to. I also want to just remind everyone that this Friday's non-farm payrolls, we usually do a live trade on a live account. So this afternoon when we do the scalp, that's going to be a demo trade, but it will be a live trade on a demo account. Come Friday, we are going to do the NFP trade. It will be a live trade on a live account. So I'm just popping the link in for that into the chat and cordially invite everyone to it. As far as I understand, there's no email going out this month because the email marketing team are sort of light in terms of staff given the end of the year. So if you'd like to join me, the link is in the chat, or you can just email me and I'll send the link directly to you. Good morning, Michael, and really nice to have you on the webinar, and thank you everyone for joining. And let me just bring up our market commentaries disclaimer. I'm going to keep this on screen for a few moments. Hey Katie, good morning to you. Nice to have you on the webinar as always. Here's our references. I've added in cnbc.com as a reference because we'll go through the CNBC morning note. And I just think instead of me sort of just reading it to you blindly, I'll read it to you and you can all read along. We'll go through it very quickly, and then we'll go through to the actual chart. And I was looking at the DAX chart, and I think that there is a nice development that needs to be mentioned, or when I say nice, potentially positive given the risk-off environment that we're in. Let's just go through to the morning note, and it starts with European markets set to rebound after the tumultuous session due to Omicron COVID variant. European stocks are expected to open higher today after struggling to regain ground amid fears around the new Omicron COVID variant. The positive start to the first day of December comes after global markets were rattled at the start of the week and into Tuesday by concerns surrounding the new Omicron COVID-19 variant, amid fears that it could evade vaccines. Major markets across the Asia Pacific bounced, and US stock futures were higher in overnight trade following a sell-off on Wall Street yesterday. That sell-off on Wall Street did actually take me by surprise, because it was looking like it was supported initially, but clearly the testimony by the Fed chair in front of the Senate Committee on Capitol Hill, I think, was a catalyst to the sell-off. We actually saw the dollar bounce, and at the same time, yields bounced. At the same time, Nasdaq dropped. Hey, Indran, morning to you, and thank you very much for joining. Let's just see. Okay, it's just here. US stocks hit the session lows. Here we go. When the Fed chair Jerome Powell said the central bank will discuss speeding up their bond buying at its December meeting. So this is going to be discussed. As things stand, so this is clearly a hawkish type of announcement. Perhaps because of this new variant, maybe they delay that by one meeting. So in other words, they'll discuss it and then say, well, let's see, perhaps let's hold it at the current pace and or revisit this in another sort of in the next meeting. That's potentially something we should consider. Nevertheless, the market felt this was really hawkish. That's when you saw the yields bumping higher. Despite the potential disruption of Omicron, the Fed chief said he thinks reducing the pace of monthly bond buying can move quicker than the 15 billion a month schedule announced earlier this month. All right, so we'll see if that is going to happen. Hopes are pinned on vaccine makers' ability to develop effective shots against the strain, but there are still many unknowns about the new variant. The WHO has said it will take several weeks to gain a full picture of how Omicron's mutations affect its response to the existing vaccines. Markets nosedived following comments by Modernis, who told the Financial Times that he expects vaccines to be less effective against the new strain. It also could take months to develop and ship a vaccine that specifically targets the new variant. No major releases for Wednesday, but the data that we can look out for are PMIs for Eurozone, Ireland's unemployment, okay, German retail sales. Hey Howard, okay, cool, got you, no worries. All right, let me just bring up the DAX here. And we're starting off at the weekly. Let's take this out. All right, so we'll start off with the oscillators first. And the oscillators are declining. So you can see that the stochastic has rolled over, and we need to keep an eye on that. And you can see that the RSI is under 50, and we need to keep an eye on that. So what do I mean by keep an eye on that? So primarily, my opinion is the stochastic is the more important of the two to keep an eye on. And the trajectory towards the lower quintile is what we want to just be keeping an eye on. The closer we get to 20, the more intense the bearish momentum. So that's, we want to keep an eye on that. The RSI, well, if the stochastic heads towards 20, well then the RSI is just going to stay under 50. So it's telling us exactly the same thing. Where the RSI tends to be better than the stochastic is at the extremities, the extreme levels, and well, we're not there yet on either side. So ideally, the RSI pushes back about 50 and the stochastic pushes back into the upper quintile, because that's the bullish side of things, but we're not there yet. What I think is the development that I sort of mentioned earlier that is potentially positive is actually this week's price action. So this is last week's sell down, and what we spoke about at the beginning of the week is that the range of this candle is going to be problematic. And the reason that it's going to be problematic, or why I thought it was going to be problematic, is because with such a massive range between its high and a low, a lot of price action is potentially going to take place inside of that range. And if it takes place inside of that range, they effectively are directional for a fair amount of time to get the sort of the bullish or bearish bias within a range. It just makes trend detection more difficult and longer. So kind of what I was suggesting, if we've got this big ranged candle here, well, can we regard this as bullish? Can we regard this as bullish? Well, it's difficult to regard this as these two candles as bullish because they're within a long-range candle, right? But the way that the price action has developed this week has actually shifted the focus from this candle to this candle. How so? Well, it's, let me just push this down. Push this down. How so? Because this has actually given us a reference candle. You see, this week's price action has given us a low that's lower than last week's candle. Now that's potentially good. It's only potentially good because if we carry on getting, let me just add a few more definitions here, and then I'll take the discussion forward. So this candle, this week's candle, has a lower low, okay, which is what we just said. But at the same time, it also has a lower high. So this week's candle, clearly its high is lower than last week's high. This week's low is clearly lower than last week's low. And of course, if that carries on, despite the color of the candles, so if we get a series of lower highs and lower lows in terms of candlesticks, well, that's going to be taking price down. The swing's going to be to the downside. So that's why we just need to acknowledge there is a potential for positivity here, but we need more evidence. And the reason for that is because we've got the lowest low here, it makes this the reference candle. In other words, we can now measure potential bullishness because it kind of almost nullifies this long-range candle. I mean, we still would need to keep an eye on the emotion behind the risk markets because this is a huge emotional sell down here. But if we get a candle next week that looks like this, sort of a strong blue candle that closes above this week's high, then we've actually got the swing low set in. And once we've got a swing low, well, that is a slightly more positive picture because swing lows are what's needed for swings, for upswings, and swing highs are what's needed for downswings. So this is kind of I think as good as we could have hoped for, notwithstanding that this in of itself is a swing high. In other words, we're not out of danger yet. We're not out of danger yet. Nevertheless, I think this was the best that we could have hoped for this week. If there is some sort of support to come in. I also want to just say that the emphasis on sort of a swing low as opposed to a swing high is intentional. And the reason for that is because if we go through to the monthly, well, the monthly chart is actually in uptrend. So if we go through to our primary, the highest we can possibly go in terms of the tools that we have, we do have a higher trough followed by the higher peak. So on the highest level possible, there is an upwards bias. The stochastic on the highest level is still positive. So in order for the strongest trend to maintain, well, one would need to see some sort of support coming in on the weekly. Whether that happens or not, it still remains to be seen. There's if there is news that comes out of the testing for Omicron that is worse than expected, well, then this swing high, it is the active swing at the moment. So let's just keep an eye on price action and see if we do get some sort of support that comes in here. I don't know if it will, but if it does, this is as good as a good a level as any. Support, 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 and all of a sudden potential support over here. Let's go through to the daily chart, and the daily chart here unfortunately is not the greatest in terms of supporting the weekly chart. If anything, this is in our weak area, and we've got this expansion in the Bollinger Bands, which shows an increase in volatility, which certainly depicts the difficult situation that we're in. My preference, okay, is for support to come in on a longer term chart, because and this could just be I think a psychological perhaps block, but my thinking is that, you know, we've kind of been here before. Delta was a real sort of shock to the system, so to speak. Omicron is, to me, a similar type of shock, and I think that we would most likely respond to it in a similar way to that responded to Delta. And given that, I wonder if that type of thinking has already been discounted into price, and if it has been discounted into price, well, then these dips become all of a sudden quite interesting to me to see if they bring in some support. What I would need really is for price to get out of zone 3 back into zone 2. So the fact that we're still in zone 3 here certainly makes me feel uncomfortable, because that's our weak area. And until we get out of the weak area, well, there's no arguing that we're in zone 3. More than that, you can see that we are in quite a weak area in terms of the stochastic. Okay, so now if we see the stochastic hit below 20 on the daily, and because there is a zone 3 move here, what we need to do is we would need to keep our eye on the signals given by our triggers. Yeah, Chris, I did hear that. So there is a news report that Omicron was found in the Netherlands before it was located in South Africa. I did hear that. Again, I don't know the ins and outs of I guess the concentration and the spread of these, but I did hear that, yeah. All right, so all right, so just going back to the hourly, we've got the zone 3. We've got the zone 3 position here. Keep an eye now on whether we get a bearish cross and a bearish cross there. Okay, let's get rid of this. So keep an eye on that. Also keep an eye on central pivot, and keep an eye on whether the EMAs, okay, the EMAs start moving in this northeasterly direction. Because if they start moving in that northeasterly direction, okay, then we are in the 80 on the hourly. Then we want to go back to the daily and see if we get a cross upwards on the stochastic on the daily, and we want to see if it starts making its way towards the 80 level. So I guess the progress needs to first happen on the hourly. Do we cross downwards, and does the stochastic drop out of 80, or do we get some sort of northeasterly movement here? All right, and then we can start seeing, well, hang on a second. Well, now that we've got this reference candle on the weekly, this actually may be a chance for us to exploit the pullback. However, the idea here is we have to see if the price action pulls in the support today. So very difficult environment. What we said on Monday is we are in a high risk environment, and because we're in this high risk environment, stop losses, money management simply cannot be discussed. They must be adhered to. There's no sort of debate around it, because risk is heightened. The only way we can protect ourselves against risk is with a stop loss and money management. But the market in itself is exceptionally tricky. It's exceptionally tricky. We've got this swing high, but I'm hoping, personally, I'm hoping it gets negated by a swing low. I'm hoping that we shift from zone 3 into zone 2, and then I think that we've got a really good opportunity here, and we're just going to have to monitor it. So let's just keep an eye on the hourly and see which way the shorter term traders decide to push today. Chris writing here, Israel Health Minister said booster vaccine seems to work against the new variant. Yeah, so I think that's, again, I want to first of all admit my lack of expertise in this area, which is huge, right? But my feel is we've been here before. It's not a comfortable place to be. It's a very, I think we're all kind of nervous. But I think, you know, we're fairly resilient as people, and I'm hoping, you know, that this is kind of just, we follow along the path that we've previously been on. If that is the case, then perhaps these dips are really good opportunities for us. I want to just reiterate, there will be a US Open this afternoon. So if you have the time, please join me for that. We will do a live trade on Friday. That's the non-farm payroll. And if there's any questions, please go ahead and type those in now. I think the ultimate takeaway here is that we are in tough markets. It's much easier to trade a smooth trend, isn't it? And this is anything but. All right, nothing coming in. So let's conclude at this point, and then we'll chat later this afternoon. Thank you very much for joining, and Chris, thanks very much for the information, much appreciated. And we will chat later in the day. Thanks, guys.